All right, let's talk about Adobe stock, ticker Adobe, and what's been going on recently because things are getting very interesting. As of April 13th, 2026, Adobe stock is still down about 65% from its all-time high, which is a massive drawdown for a company of this caliber. But today, we saw a strong bounce. The stock jumped 6.55% during regular trading hours, closing at $240.11. So the big question is, what's driving this move, and is this finally a turning point? Let's break it down. First, why did the stock increase today, and how has it been performing recently? Today's rally wasn't just random. Yes, the broader software sector rebounded strongly, driven by renewed investor confidence in AI monetization, but Adobe had a very specific catalyst. The company announced a strategic partnership with Tesco to deploy its AI tools, including Firefly, into Tesco's Club Card loyalty program, which reaches over 24 million households. That's a big deal because it shows real, tangible AI monetization, something investors have been questioning. This directly addresses one of the biggest fears around Adobe, that AI might disrupt its business instead of enhancing it. Now looking at recent performance, it hasn't been pretty. The stock recently hit a 52-week low of around $225, and it's down about 32% year-to-date in 2026 before today's bounce. A lot of this decline has been driven by concerns over AI competition from tools like Sora and Midjourney, as well as uncertainty around leadership, with longtime CEO Shantanu Narayan planning to step down. So despite today's rally, sentiment has clearly been very negative. Next, what exactly does Adobe do? Adobe is essentially the global leader in creative and digital experience software. Its core business is divided into three main segments. First, Creative Cloud. This includes industry-standard tools like Photoshop, Illustrator, and Premiere Pro. These are deeply embedded in professional workflows, and now they're being enhanced with generative AI through Adobe Firefly. Second, Document Cloud. This includes Acrobat and PDF-related services, which remain highly profitable and widely used across enterprises. And third, Experience Cloud. This is Adobe's enterprise platform for marketing, analytics, and commerce. This is also where the Tesco partnership fits in, and it's a key growth driver going forward. Now let's talk about analyst price targets. For the next 12 months, the consensus target range is roughly between $330 and $366. That implies about 40 to 50% upside from current levels, which is significant. Looking further out, the long-term outlook is actually very polarized. In a bullish scenario, where Adobe successfully monetizes AI and maintains its dominance, some projections see the stock reaching $900 or more by 2030. But in a bearish case, where AI commoditizes creative tools and erodes Adobe's moat, some models suggest the stock could stagnate between $150 and $200. So clearly, the market is very divided on this one. Now, let's look at valuation because this is where things really stand out. Adobe is currently trading at a forward P/E of around 10x. That is extremely low. In fact, it's near levels not seen since 2011 or 2012. For context, over the past decade, Adobe has typically traded between 35x and 50x earnings. So this is a massive compression in valuation. What's interesting is that this low multiple is happening despite the company still growing revenue at around 12% annually. In other words, the market is pricing Adobe almost like a declining business, which doesn't fully match the fundamentals. So, is this a good buying opportunity? Personally, I think this is a great entry point to buy. At around 10x forward earnings, the market is essentially pricing in a worst-case scenario, something close to business failure or major disruption. But at the same time, Adobe is still growing, still highly profitable, and still returning capital to shareholders through buybacks, with about a 6% share buyback yield. That creates a very attractive risk-reward profile, in my opinion, where the downside seems relatively limited compared to the potential upside if sentiment improves. That said, we do need to talk about the risks, because they are real. The biggest one is generative AI competition. Tools like Sora and Midjourney are making it easier for non-professionals to create high-quality content without needing Adobe's complex software. If that trend accelerates, It could weaken Adobe's pricing power over time. Another major risk is the CEO transition. Shantanu Narayan has led the company for 18 years and has been instrumental in its success. His departure creates uncertainty, especially since a successor hasn't been clearly established yet. There's also regulatory pressure. Adobe has faced scrutiny over its subscription practices, including a recent DOJ-related settlement of around $150 million. On top of that, the failed Figma acquisition limits its ability to expand through M&A. And finally, competition in enterprise marketing and AI tools is intensifying, which could impact growth in the Experience Cloud segment. Now, a few other important things investors should know. Adobe has been aggressively buying back shares, reducing its share count by about 6% year-over-year. That boosts earnings per share even if net income stays flat. Also, Adobe's Firefly AI platform is actually differentiated in one key way. It's trained on copyright-safe data, making it commercially viable for enterprises. That's a big advantage over some competitors. Firefly has already generated over 20 billion assets, and Adobe's AI-related revenue more than tripled in the first quarter of 2026. So despite the fears, AI could actually become a major growth driver. And finally, keep an eye on the next earnings report, which is expected around June 11th, 2026. That could be a major catalyst, depending on how AI monetization trends show up in the numbers. So overall, Adobe is at a very interesting point. You have strong fundamentals, a beaten down valuation, and a lot of fear priced in, but also real risks that can't be ignored. Alright, that's it for today. If you found this analysis helpful, make sure to like the video and subscribe to the channel for more stock deep dives like this. Thanks for watching, and I'll see you in the next one. And just to be clear, this analysis is for informational purposes only and is not investment advice.